You are listening to My HR Buzz, brought to you by My HR Concierge. Hosted by Chris Cooley, we'll bring you various topics and guests to shed light on the often confusing world of HR and also employee screening. We'll be putting the human in human resources.
I want to thank you for joining us today. I think we've got a great topic. We have a topic that most people hate, but a lot of people need to know about, which is the Affordable Care Act. And today I've got Misty Baker with me from BenefitMall. She is the Director of Compliance and Government Affairs and self-proclaimed compliance nerd. So, which is good for us, and I am one as well. So that should hopefully make for a good podcast. So thanks for joining me, Misty.
It's my pleasure. Hey, just as a little tidbit, my license plate on my car is Insurance Nerd.
Is it?
It's INSNRD, Insurance Nerd. Yes. So,
Now, how was that not taken? That's what I'm trying to figure out.
I know. You would think it was already taken, but I guess I was the first. So I've had it a long time. I know. It's crazy.
Funny. Well, today we're going to talk a little bit about the Affordable Care Act. And primarily, we could probably sit here for 2 days and talk about the Affordable Care Act. And so, but I thought now that we're getting toward the end of the year, probably makes sense to kind of start talking about the forms, 1095 forms, 1095B forms, and maybe go through some of those frequently asked questions that we get related to the ACA. And so one of the big ones, and to me is kind of the starter, specifically for larger groups, is how do I figure out if I'm an applicable large employer, which is essentially just a fancy way to say, am I big enough to where I'm required to file the 1095 and 1094 forms?
Yeah. And, ACA's been around a really long time. It's like a teenager. And I will say this, many people don't know how to count in the ACA to determine if they're an ALE or not. And it gets really confusing because you have the Affordable Care Act count, you have COBRA counts, you have FMLA counts, and they're all a little bit different. So having, just the basic theory of am I an ALE or not, you really have to drill down to that 30 hours per week or more by your employees.
Mm-hmm.
And, we see a lot of special employers out there who says, oh, my full-time equivalent is a 20-hour work week or 32-hour work week, or it's 40 hours. That's all fine. You can have a 40-hour work week saying this person's a full-time employee. But when it comes to offering them health insurance, when you are an ALE, that number is 30 hours a week or more.
Mm-hmm.
So that's the first one. The other number that you have to remember is 120. And this is something that a lot of employers don't understand. And 120 is not always the easiest thing to remember. But what you would do is you would take your full-time employees and you would take your full-time equivalents. And remember, those equivalents are just a percentage, basically.
Mm-hmm.
I don't know if you're good at math, but I don't do math in public. So, but they are a percentage of a person, right? So you have to count that hour for those part-time employees. And so what you do is you take your full-time equivalent numbers for that month and you follow a two-step process. You combine the number of hours of service for all of your non-full-time people and for that month, and you divide that total by 120. And so that's going to give you the percentage. And if that number is 50 or more, that means you are an ALE and you're going to have to start offering coverage or pay the penalty. I always forget to say that part, but there are plenty of employers out there who still say, I'm paying the penalty. I don't care. Yeah. Or I'm going to see if I get caught.
Yep. I get that a lot. Yep.
And I mean, better than me. We talk about penalty letters because they're so satisfying, number one, to fix.
Mm-hmm.
But number two, they just scare the crap out of employers. And so they get a letter saying, We had someone go to the exchange, get a subsidy. Now we're going to charge you $1 million. How do you feel about that, Mr. Employer? That's when we get the call, you know?
That's funny. And one thing too, I know a question that we get related to that ALE a lot is there's a lot of misconception that says, hey, I got 50 employees this year. I got them in September, so I have to report this year. And I think that's something a lot of people miss is that you have to look at the prior year. It's the prior year calculation to determine if you have to comply this year. Because if you think about it, common sense, which I know we're talking about the government, but if you all of a sudden become 50 employees in November, they can't expect you to go back to January. And, now you start looking at affordability and a lot of other things, right? So it is always that prior year that you look at.
Yeah. And that's another good thing to bring up. It is the prior year. So you're looking at that. The minute you hire your 51st employee doesn't mean you're an ALE. So, not, panicking the minute you hire your 51st person. And just like you mentioned, affordability, people are so confused about affordability. They think that if they gave somebody a raise in September, they have to adjust, everything for all employees. And that's just not the case. You don't have to do that. You really look at your calendar year for that. And your plan year. And that plan year could start July, So just not to get everything mumble jumbled together. Again, ACA math is difficult. So you want to make sure that you're doing it right. Not only to benefit the employer so that they are not being penalized, but also that they're doing the right thing and offering the right coverage to the right people at the right price.
That's right. No, absolutely. And one thing too, we get a lot is I hit 50 last November, so therefore I have to comply this year. And
in November.
Yeah. So what we tell people is that it's a weighted average. So just because you hit if you hit in November, but you had 30 from January through October, that doesn't necessarily mean that you hit the 50 calculation for the year, if that makes sense.
Yeah, absolutely.
So that's another thing that we work with folks, that it is because a lot of times they think if I go to 51, I have to. But to your point, there's some calculation there. There's some math.
Yeah. And it's not wiggle room, but it's just knowing the right math to do for your employer group. And so if you can, as a broker agent, if you can nail that down, you'll really serve your clients really well. I see a lot of times that some agents and brokers love the 50 plus space because they love that non-ACA type world. And there's a lot of brokers who love the under 50 space. But you just have to know how to calculate. And being under 50 is not a get out of jail free card. That's the other thing you have to remember.
That's right.
There are forms, required even if you're under 50.
Yeah, no, that's right. And so if they're an applicable large employer, what is the requirement? That's another question that we get a lot, is what is that requirement? I'm an ALE now. From a reporting perspective, what do I have to do?
So in order to stay out of the penalty box, that's always the first thing I say. You can always choose to pay your penalty. Nobody cares. To stay out of the penalty box, what you have to do is offer the right kind of coverage at the most affordable price for the employee only. We don't care about dependents or family. And you have to offer it to eligible employees. Eligible employees is the key right there. But also price is impactful, the right kind of plan, and then offering it to your eligible employees. All three of those things will keep you out of the penalty box if you're doing it right.
And then from a forms perspective, what do they have to? So at the end of the year, what do they have to file? And for large groups, we'll kind of bifurcate self-insured and fully insured, specifically as we start talking about smaller groups. But from larger groups, what's the requirements there?
So you would have to do an annual 1094, 1095 filing. Each one of your eligible employees would need to receive that form. And I keep saying eligible because this is really important to remember. Say if you have a group of 100 and you know you're an ALE, but only 22 people take your health insurance plan, you still offered it to all 100 if they were eligible employees. So it's really important to remember, did they take their spouse coverage? Did they decline coverage altogether? Maybe they don't believe in insurance, so they don't want any of your stupid insurance. I mean, I've heard every kind of excuse out there in the book. But that's their right. But they were still an eligible employee to come on your plan. And we highly recommend that they receive that 1095 form, just to make sure that you can prove to the IRS that you did offer coverage to all of your eligible employees. That will serve you well as an employer, because if you cannot prove that you offered your eligibles coverage, they can easily penalize you. Now, proving that you offered eligible coverage is super simple. You just have a declination form. You say, Joe Blow, I know you hate insurance, you don't believe in it, but can you sign this form? Or can you electronically sign this form to say that you don't want it? You don't have to tell me why.
Right.
I'm over that part. You don't have to tell me why.
We don't care.
We don't care. But as an employer, I want that kind of insurance policy. So if the IRS does come knocking on my door because Joe Blow decided, oh crap, I have cancer, I'm going to go and buy individual insurance and receive a subsidy, that I'm protected as an employer, because the IRS will come back to me as the employer and say, hey, look, Joe Blow, he got a subsidy. I see he works for you. Did you offer him coverage? But now you have to prove it to the IRS.
Yeah.
So those level forms will absolutely be required. Now, employees are going to take that form, they're going to throw it in the trash, or they're going to put it in their tax file, take it to H&R Block, whoever's filing their forms. It doesn't really mean anything at this point. And you don't have to put it on your, tax return. It does ask you on your 1040, did you have health insurance? But there isn't really a specific area to say, oh yeah, well, I was offered an affordable plan at the right price, the right kind of coverage. Doesn't really go into all that. It's more of an employer burden at that point.
Yeah, it's been neutered a little bit as far as the need for the employee.
Yeah.
But yeah, and that's a good point when you talk about eligibility, because I know we work with a lot of grocery stores and folks like that may have 600 employees. But they'll freak out because I got to do 600 forms. No, you really have to do about 50 because everybody's part-time. Nobody's working 30 hours, and so that's a big thing to really kind of nail and to make sure of.
I love that part that you bring up about part-time employees, and I have seen employers be extremely dumb when it comes to part-time employees, and some of them are really, really smart. If you're a grocery store and you have 600 employees and 550 of them, or let's say 500 of them are part-time, all you have to do is be able to prove that, right? You just have to be able to track and say these folks did not work 30 hours a week or more. They are part-time employees. Big mistake I see employers doing is not using that part-time label. They just hire everyone on full-time, even interns. I see a lot of where you just hire them on, they're full-time. Interns probably are on their parents' insurance anyway. They probably only worked 60 days out of 12 months for you. Same thing as servers, restaurants, those kind of things. Anytime you have high turnover, I highly recommend that you classify people as part-time employees and you don't work them more than 30 hours a week. Then you're okay.
Yeah, and the other thing that I would suggest there as well is we run into a lot of people that calculate all this with a spreadsheet. And there are so many, back in 2015, back when we kind of started all this, a lot of people did that because we didn't have the systems to do that. And so what I find is a lot of people are trying to do this with spreadsheets. And what I will say is it is probably the likelihood of being calculated correctly in a spreadsheet is less than 1%. When you start thinking about all the different rules about when someone leaves and they come back, do they get insurance automatically? Do they go? All those different things. It's not quite as simple as just saying, Joe's not here anymore. He comes back, he's rehired. I mean, it depends on what that time period is. And so one thing I always suggest too is when you start talking about, if you have variable hour guys or gals, employees, you get you a system to calculate it. Get you something that's built for that. If you're ever audited, it's just a nice insurance policy, right?
I 100% agree with you. The spreadsheet method is really not going to work. I mean, I see brokers and agents all the time who don't even know what the rehire provision is.
Mm-hmm.
And so they may have miscalculated on their spreadsheet. That's a great example. But yeah, you need something in place to be your, back door, your eyes and ears,
Mm-hmm.
because you don't always have the information in the back of your mind, right? As an employer, you want to make sure that you're not going to be penalized and fined because you missed someone who should have been offered coverage. So having a system in place, not a spreadsheet, is probably the most important thing that an employer can do. They can enter that information real time.
Mm-hmm.
They can figure out, a robust area, who has to be offered forms. And quite frankly, with the IRS saying that you have to file electronically for everybody if you have more than 10 forms, it only makes sense to put away your yellow legal notepad where you're scratching out hours and doing, ACA math, and find something that's really good for your company.
Yeah. No, I agree. One thing too, here's another. We file a lot of back forms, right? When, going back 3-4 years, whatever. And I would say probably 75% of those, the statement that is made to us is the carrier sent them a form. So let's kind of go through the process of that. So just because they get a form from the carrier does not mean that the employer does not have to send out a 1095 form as well.
Right. Yeah. If carriers send you forms, that's great. That's fantastic. Applaud. But the employer is ultimately responsible for these. And so you really want to make sure that you're, reviewing those forms. Separately, you may be running a different kind of funding level, even if you're a small employer. And so you're going to get this, B level form. You're going to be like, what the heck do I do with this?
Yeah.
People forget that 1094 and 1095s come in A, B, and C. They come in 3 flavors.
Yeah.
What flavor are you? You're probably not an A flavor because that's the individual market, but the B and C flavors are definitely for employers. And that's something that, we didn't talk about when ACA was first passed and we were all kind of going through these 1094s and 1095s. I mean, it was hard enough for us to learn all the Series 1 and Series 2 codes and to figure out, what it all meant because it was in like this IRS language. No, we got it. But in the beginning, it was very confusing. We didn't really talk about these B-level forms. We only talked about the C-level forms. And so now we're going back and making sure, and quite frankly, we didn't have these level funded plans when ACA first, was passed. So it's not the industry's fault. We just adapted as an industry, and we're able to offer other plans that were a better fit for employers rather than a strict ACA or a strict non-ACA or self-funded type plan.
Right.
So the industry was really good at coming in with solutions. And I think those, level funded groups, partially self-funded, however you call it, wherever you're at, are innovative. I think they're really good for employer groups, no matter what the size in most cases. But there are some different things that you have to be aware of. I mean, we're just talking about 1094, 1095, but, what about PCORI? Are you going to have to do that? How do you give back any MLR rebates? I mean, how do you account for that? So it's, we are just talking about one tiny provision with the 1094s and 1095s. Talking about backfiling, I get this question a lot because, you run into someone who's an HR director, maybe brand new, or someone who's been in it a long time, and they say, well, I've never heard of a 1095B, but my insurance company sent one to us. What do I do with it? And you're like, oh, this is a whole conversation. Grab a cup of coffee and let's talk about it.
Yeah.
It's a moment for education. But the second part is some people get really nervous because they have never filed those forms before.
Mm-hmm.
And, I see teeth in the IRS now. When ACA first passed, there was a lot of looking the other way.
Yep.
Now they're really serious about it. So my best advice to clients who have never filed, a 1094 or 1095, and they should have, is go ahead and file. Take the time, spend the money, do the due diligence, and file.
Yeah.
I do run into a lot of clients who are in the camp of, well, I'm just going to wait to see if I get caught. And that's a strategy.
Yeah.
It is. I think it's a terrible strategy. But it is a strategy nonetheless.
Yeah. We get that question a lot, and that's kind of where I fall on it too, is, to your point, a few years ago, a lot of these penalties were waived, right? They weren't. And so I'm always asked, well, are they going to waive the penalty? Are they really going to do it? And I think to your point, I think they're not quite as lenient as they used to be. And so the way it's the company's decision. You guys do what you want, but my suggestion is I would rather file and then fall on the sword and say, look, we didn't know, we had turnover in our HR department. We didn't, something happened, whatever that reason is, and go that way versus not filing at all and then having to come to you and you go, whoops.
Yeah.
Well, why didn't you file? We just didn't. And so I think
you hear crickets. I don't know why I didn't file. I don't know.
Yeah. So that's a good, I think that's a good point. And we kind of fall on that same side as well. Let's just go ahead and do it. The other side is, from what we've seen, a lot of these penalty letters are 3 years late, 4 years late.
Yep.
And so, it may be you don't really know what the extent of your penalty is or what's going to happen until 4 or 5 years. And in 4 or 5 years, you could sell your business and now you have a big liability. There's so many things that occur. Let's just get it on the table and get it done.
Yeah. And let's use a resource that is really good at it.
Mm-hmm.
When ACA was first passed, like you mentioned earlier, Chris, we didn't have the products that we have today. We certainly didn't have the filing capabilities that we do today and how we know and how to interpret Series 1 and 2 codes. We didn't know any of that. Mm-hmm. And so in the first couple of years of ACA, I can totally find an excuse of, we didn't know, we were confused, it was cumbersome. But now everything should be electronic. And if you are dealing with a company, you want to make sure that you are vetting companies who can file these forms for you. You want to make sure that you ask them the hard questions.
Mm-hmm.
Does your company know about a rehire provision and how that's counted toward your ALE count? How does that person get counted? What if somebody worked 40 hours a week for 2 months, but only 10 hours a week the rest of the year?
Yeah.
So you need to be asking your vendors hard questions and making sure that they can answer those and that they have the software that's adaptable. That's the thing, is that this stuff has changed so many times. Series 2 codes didn't have very many, letters, and now it goes all the way to Z because we have ICRA and all that kind of stuff. So we have a 2Z, I think, or U. So yeah, we just, you got to pick a good vendor. You have to work with that vendor and be honest and complete with them. That's the other thing. I see a lot of people being a little bit lazy when it comes to ACA reporting, where they just kind of pencil in an answer or they don't know what answer to put. And so they just choose one randomly. And that's when you really get into gosh, you get into such a tangled mess with the IRS. It's just no fun. You don't
Yeah.
want to do that.
I think that, and that's one thing we do is, not to get salesy, but one of the things that we do, and I think people that like about what our system does is we don't ask them to put in the codes because nobody knows the codes. Nobody. And so what we'll do is we ask the supporting information. When were they hired? When were they fired? Were they offered? What kind of insurance is it? All those different things. Give us that, and then the system will automatically code it correctly because nobody knows the codes, or knows how to do them appropriately, right? And so that, I think that's one reason we've had so much success with that is because of that. It just simplifies that process for them.
You know, I was at Capital Conference with NABIP a few years ago, and there were 4 of us insurance nerds sitting at a table. There could have been wine involved. Somebody put that out there. But I had a scenario and I was like, how are we going to code this? All 4 of us came up with different codes.
Yeah.
All 4 of us came up with something different. And it was just like interpretation, you know? And I felt like we had all the information that we should have gotten all the right answers. But you're right. It is just, you never want to ask your client, are you a 2A, you
Yeah.
know, a 2B, you know, your client's going to say, I don't even know what that is. So you want to have hire date, fire date. You want to make sure that you know, when was this person offered coverage? Did they come on the coverage? You know, those kind of really good things. And, you know, Chris, it's no surprise. I love your company.
Thank you.
You know, I think you guys are doing probably some of the best work in the business. And I love you because you're so dang adaptable. You know, it doesn't take long for you guys to make a change. And I love that part. It's to me, it's I feel very safe trusting my clients to go with you guys. And I think you're an upstanding guy too, but you know, besides all that.
No, thank you. Well, you guys, you know, I was thinking about that before the podcast. I was like, well, geez, we've been working with Misty for 10 years now.
10 years.
Yeah.
Yeah.
And it's been a
long
great
time.
relationship.
Yeah,
Really
it really
has.
has been. It's been very beneficial for our clients. We always feel like, you know, you put them in very safe hands. And that's something that it's hard to pay for, you know, that trust that we have built. And we just know we make one call to Chris and we know it's going to get taken care of. So, and it's fun to like email you questions every once in a while and we go back and forth and we're like, what do you think about that?
Yeah. Misty's my sounding board. You're the one that I send that, you know, that we go back and forth with. So no, and I appreciate that. So, well, here's another question. So every election, it seems that reporting, the attitude toward reporting changes a little bit. You know, I have heard, I hate this president, so I'm not doing it. This president's going to wipe ACA out on day one. I don't have to report. All these different things. Now, none of that has come to fruition, and all of them have probably gotten a letter, a penalty letter. So I even had one client, or he wasn't a client, he was a prospect, and small group, had a self-funded, level-funded plan, kind of like you talked about, and so they have to file the 1094 forms. I mean, the 1095B forms. And I was like, well, you know, if you have more than 10, you have to e-file them. And that they had their forms. They just needed a way to e-file. So I was like, we can help you e-file. And you know, he had like 20 employees. And I said, to do that, we need copies of your forms or you need to provide information. I'm not doing that. I've never done that. I said, well, it's a new law. It went into effect January 1, this last year. I'm not doing it. Okay, so that's fine. He said, I'm sending these to the IRS, and if they don't like it, they can get over it. Talking about the printing the mail-in forms. So I was like, man, you go. You show them. You tell them what you're going to do. So it's funny the way people think about these forms and reporting. So it's a long way to get to. What are your thoughts? I mean, we know we've got the election coming up. depending on when you hear this, it's either coming or it's already happened. You see, is there anything kind of in the wind there? I know I've heard the Democrats may want to strengthen it. The Republicans may want to put something else out there. What are your thoughts?
My thoughts are there is much bigger fish to fry, and that this is probably going to be a very small blip on the either, new president's radar.
Yeah.
I don't think that there is the stomach for Medicare for all right now in this economy, when people are very vocal about the economy. So I don't think there's it may be in the American spirit to say, oh, we want Medicare for all, birth to grave, the government's going to take care of us. But I don't think it's the right financial environment for that to happen. So for a Democrat to come through and say, we have a Democrat president, maybe a Democrat Senate, maybe Republican House, never going to happen.
Yeah.
If we had, and if we have Mr. Trump as our president, I think he has other issues that will be probably a little more important to his administration. Certainly not a Medicare for all situation. I don't think he's going to touch Medicare very much at all, just because people are starting to, really enjoy those cheaper prescription prices. He may do something about Medicare Advantage plans. And that's a little off topic, but I just don't think that this is a high priority to get rid of employer reporting or to keep it. Employer reporting brings in billions of dollars in revenue for the federal government. And so they don't like to give up money.
Yeah.
So I don't think that we will stop facing penalties as employers. Could we see a different attitude about filing where it's not so, you are going to pay this, we're not looking the other way flavor? I'm not sure. But I just don't think that, there is a stomach right now for sweeping change when it comes to healthcare in the next 4 years. If we had Biden for another 4 years, he may have been able to get something done if there was that 8-year continuity.
Right.
But because we're going to have a different president regardless, I just don't think that there's enough time to get anything this significant moved.
I agree. I think plus, to your point, I think you almost have to get the Senate and the House to make any real changes.
Yeah.
Whoever wins, you have to have consistency there. There's a lot of stuff going on right now, and I just don't think it's that important. But also, what I think is it's how we make our living, right? At the end of the day, it may not be ACA reporting, but if they make a change, it's just going to be something else.
Exactly.
Because to your point, there's too much money involved.
Too
and
much.
So you may not fill out a 1095 form. You may have to fill out, Form X. So I'm with you. And so if you're out there and you're an employer and you're over 50 or you have a self-insured small plan, just file. I guess if you get anything out of this podcast, just file. And I think that's the best advice I can get.
That is the best advice I've heard all day. Just file. Just do it. It is such a headache to unravel if you don't file, especially because, you mentioned they're looking at 2022 right now. So imagine the change your company has gone through in the last 2 years, and having to keep up with all of those changes. Did you do it on paper? Do you have a wet signature on a decline form? Did you use an online enrollment system that now you maybe can't access, or you changed providers with payroll providers, or however you're managing, it is so much easier to do it now rather than wait. And you do have a little, you have a little wiggle room into 2025. So you have to file those 1095s and 1094 by February 28th. or March 31st if you're doing it electronically, which I would say 99.9% of our people need to be doing it electronically.
Yeah.
You're not going to be that one rebel guy who's like, I'm just going to, whatever happened to that guy? Did you ever hear from him? He's like, I'm just mailing all these forms.
I did not. I wish I could get a follow-up. We could do that on the next podcast and update his status.
Yeah. Like, did they send it back? What did they do?
Yeah.
I've never run into one of those rebels yet. So that's another interesting anecdote I'd like to know more about.
Yeah. See how it turned out.
Yeah.
And the other thing too, I'm a reformed CPA, so I always like to go to the dollars. But in this for 2025, which would include the 2024 calendar year reporting that's performed in 2025, the penalty is $330 a form for not filing. Now that's a form. So if you don't give it to the employee and you don't give it to the IRS, it's a $660 penalty for every employee you have that's eligible that needs a form, in addition to the form to the IRS. So most of these groups are going to be over 50, right? So you would think, for the most part, you're talking, I get there could be some over 50 that have part-time employees, but I mean, it's going to add up in a hurry.
Yeah. I didn't know you were a reformed CPA. That explains a lot, Chris.
I am. I am. I guess my first 15 years was as a CPA.
That definitely explains it.
Yes, yes.
Much more respect now, because that's a hard job. Oof.
Now, no tax. They kept me as far away from tax as they could.
Still. It's these penalties just keep piling up, and they just keep, getting larger and larger. Yeah. So, back to your T-shirt that says just file, you just gotta encourage people to do it. And, I mentioned payroll companies earlier. I've seen some payroll companies do things really in dumb ways when it comes to these forms. So make sure that you're asking, if your payroll company is managing things, that you are asking them the hard questions as well. Mm-hmm. Also remember that if you change vendors, mid-year or from year to year, you need to find a way to get your data out of them. You got to find a way to be able to prove to the IRS what you did. And so those are some other questions I would ask as a broker, if I'm going to funnel my clients into one particular system or not.
That's a great point, and I haven't really thought through that. But if you're going to whenever you're going to a payroll company, there should be something in there that gives you a period of time where you can access that data and grab that data. If not, you're hosed.
Absolutely. And that happened a lot when ACA forms were in their infancy. Mm-hmm. People would switch payroll providers and they could not get their forms out of their old payroll providers. Or if they could get them, they were in a weird format, so the employer didn't really understand what it was.
Yeah.
So, unfortunately, that might have been a good excuse, in 2017, 2018 with the IRS, but they're just pretty relentless right now when it comes to those penalties. Yeah. What's the biggest penalty letter you've ever worked on?
We don't do a ton of that. We file, but I have heard of them in the 300, 400,000. But I know you mentioned something about you've seen
1.3 million was my largest. $1.3 million.
Yeah, great. Now, did they pay?
They didn't have to, because they did something really dumb on their forms. They totally did the wrong thing. They filled it out incorrectly. So, the employer's calling me on a Thursday afternoon, freaked out. He's like, how am I going to pay $1.3 million? I'm like, fingers crossed you won't have to. Let's hope that whoever prepared these files was real dumb. And they were. They were. And it could just be one question that you answer incorrectly, or one code. In their case, their vendor used a code that said they did not offer insurance, and it wiped the whole group out. It was a large group, just wiped them out. Yeah. Crazy, right?
Jeez. Yeah, that would probably ruin my Thursday afternoon if I got that letter.
Yeah, he wasn't happy.
Yeah. Well, good deal. Well, I really appreciate you being here and being on the podcast. I always enjoy it. You're always a great guest, and I appreciate it. And gave me a new idea. We may start selling podcast merch. It'll just be just file.
Just
The
file. You need
t-shirt.
hats,
Hats and
t-shirts.
shirts.
Don't be dumb. Just file.
There you go. We'll have to figure out a royalty aspect to that for you. But we'll see if we can get some merch going.
Love it. Love it. It's a pleasure to work with you, Chris. I just adore you and your company, and I think you guys are just doing the right thing, which it's so refreshing. I love to see it. So thanks for having me.
Absolutely. We definitely appreciate the relationship. It's been a great one. And so we definitely appreciate working with you and Carol. And so it's been great. So well, thank you very much. And we will definitely do it again. Whenever you have time, I'd love to have you back.
All right. Sounds great.
All right.
All right.
Thanks.
Take care. Bye-bye.
Thank you for listening to the My HR Buzz podcast presented by My HR Concierge. For more information on this topic and many others, please visit our blog at www.myhrbuzz.com. It's a free resource and has a lot of great information on HR and employee screening related topics. If you like the podcast, please do 3 things for us. 1, leave a review. 2, subscribe to the podcast. And 3, tell a friend. Our podcasts are available on iTunes, Spotify, and many other places where you get your favorite podcasts. If you'd like to provide ideas or feedback on future shows, send us an email at podcast@myhrbuzz.com, or you can reach us at 855-538-6947, extension 108. This is Chris Cooley with My HR Concierge. Thank you for joining us, and we look forward to sharing more topics with you in the future.